Hello and welcome to Stock Value Tips. Today we're taking a closer look at Kimberly-Clark Corporation, a global consumer products company specialized in personal care, hygiene, and tissue products. Kimberly-Clark is best known for everyday essentials like Huggies diapers, Kleenex tissues, Scott toilet paper, and Kotex feminine care products. These are items consumers buy repeatedly, creating recurring, predictable revenue. The business makes money by selling these products through retail, wholesale, and international distribution networks, from supermarkets and drugstores to online channels. While Kimberly-Clark has a strong portfolio of trusted brands, it operates in a competitive environment. Its largest competitors include Procter & Gamble, Unilever, and Colgate-Palmolive, all of which also produce household and personal care products. In this video, we'll break down Kimberly-Clark's business model, current risks, growth opportunities, valuation, and whether the stock might be attractive today. Kimberly-Clark faces several key risks, especially as it prepares to acquire Kenvue. First, the integration of Kenvue presents a major challenge. Combining operations, supply chains, and corporate cultures is complex and could take years to realize expected synergies. Second, supply chain and raw material costs remain volatile, particularly in paper, pulp, and packaging, which could pressure margins if costs spike. Geopolitical and tariff risks are another consideration. Kimberly-Clark operates globally, and trade tensions or import-export tariffs could affect profitability. Changing consumer behavior also matters. Trends in hygiene, personal care, and home products can shift quickly, affecting demand. Competition is intense. P&G, Colgate, and Palmolive, Unilever, and other consumer health companies are constantly innovating and may limit market share growth. Finally, the financial risk of this large acquisition is significant. While the deal is expected to create value, unforeseen costs or challenges could impact Kimberly-Clark's cash flow and leverage ratios. Despite the risks, Kimberly-Clark has several strong opportunities ahead. The Kenvue acquisition could be transformative. It will expand Kimberly-Clark's product portfolio, allow for cross-selling to new customer segments, and create operational efficiencies across manufacturing and distribution. The company also benefits from strong brands such as Huggies, Kleenex, and Scott, which provide pricing power and customer loyalty. Emerging markets represent a significant growth avenue. Rising incomes and increasing awareness of hygiene and personal care products in regions like Asia, Latin America, and Africa can drive long-term revenue growth. Innovation and new product launches continue to be critical. Kimberly-Clark is investing in sustainable, premium, and differentiated products that meet changing consumer preferences. Finally, operational efficiency improvements through supply chain optimization and economies of scale can enhance margins and free cash flow over time. Together, these factors position Kimberly-Clark to generate growth and value creation over the coming years, especially if the Kenvue acquisition is successfully integrated. Looking at Kimberly-Clark's financial performance, the company has delivered a modest annualized return of 0.9% over the past 10 years, including reinvested dividends. The P/E ratio stands at 16.5, suggesting fair valuation, while the beta of 0.28 indicates low stock price volatility compared to the market. With EV/EBITDA at 8.9 and net debt/EBITDA of 1.6, Kimberly-Clark maintains manageable debt levels, leaving room for strategic investments, such as the potential Kenvue acquisition. ROIC is very strong at 27.7%, reflecting the company's ability to generate high returns on its invested capital. Price to free cash flow is 19.5, highlighting decent cash generation relative to the stock price. Finally, the net income margin is 9.98% and gross margin is 35.65%, demonstrating solid profitability within the consumer staples sector. These metrics indicate that Kimberly-Clark efficiently manages operations and maintains consistent financial stability. Kimberly-Clark currently offers a high dividend yield of 5.14%, with a payout ratio of 83.8%, showing the company is committed to returning cash to shareholders while maintaining financial stability. Even with the recent challenges and potential Kenvue acquisition, Kimberly-Clark generates strong and consistent cash flow, which supports continued dividend payments and long-term shareholder value. Overall, Kimberly-Clark represents a stable, income-focused investment with moderate growth potential from strategic initiatives. Thank you for watching. This is not investment advice and we encourage you to do your own research. If you found this analysis helpful, please like and subscribe, and let us know in the comments. Do you currently own Kimberly-Clark or would you consider it?